Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day, and we are bringing the VRIC to you each and every week with our series of expert online panels. And today we have John Feneck of Feneck Consulting and Don Durrett of GoldstockData.com back for, I think this might even be round 4 of a long-lasting discussion, very well-received discussion on gold, silver, and of course, the mining stocks as well. We're going to be discussing the doom loop that the US government finds itself in. How will silver break out this year? Don, I know you've made some predictions on that, so I'd love to follow up. We're also going to be discussing the gold and silver mining stocks, where you're both currently looking for value. Gentlemen, it's great to have you both back on the show again.
Thanks for having us back, Jesse.
Well, I want to start with something that you posted on X, Don, because many have pointed out we are in an economic doom loop of never-ending debt that can also only be resolved by some kind of collapse or reset of the monetary system. What you wrote is the US government cannot stop spending. Conversely, the Fed must inject liquidity to keep the asset bubble from popping. So both are trapped with injecting liquidity. What is the end game here? How do you see that situation playing out? And how do the precious metals play a role in this scenario in your mind?
Well, I'm of the opinion that the Fed is already feckless, that they're basically powerless. There's nothing they can do from here forward. All they can do now is react. So if you go back to 2008, the last crisis we had, basically we had no inflation then, and we didn't have the debt problem. I think debt was under 6 trillion, or excuse me, yeah, it was crazy. I mean, under 6, and now we're at 35. So we didn't really have a huge debt problem. We didn't have any inflation at all. So the Fed had, the tools that they could basically get out of the problem, if you will. And now everybody is, not everybody, but Wall Street to a large extent is kind of ignoring the state of affairs that actually exists today. And so the doom loop is basically the debt problem. So what is the debt problem? The debt problem is we've had to increase the amount of debt that we expand every single month. So back in 2008, we started expanding. It was like less than $1 trillion a year, and it's just now we're up to like 2 trillion. It just keeps getting bigger and bigger and bigger. And so the federal government cannot stop spending, especially now, because they're literally, I mean, if you take if you just take away government the deficit spending, we're in a recession. You take the 2 trillion away, balance your budget, because GDP includes government spending. So when they throw that GDP number out there, they're including the government spending. Well, the government spending is borrowed money. I mean, all that excess, if you will, that deficit, it's all borrowed. So it's like we're printing GDP basically. We're living off of debt. And so it's like an average family or a business. If you're living on debt, it's just a matter of time before it all basically blows up. So the doom loop is they can't stop spending, but simultaneous to that, since they can't stop spending, the dollar continuously gets weaker. And then that brings in the Fed. And then the Fed, they can only print now because of this debt problem. They can only print so much money without causing more problems, without causing more inflation. For instance, they expanded their balance sheet from less than $1 trillion in 2001, and today it's like over 7 trillion. So they've been expanding their balance sheet. When they expand their balance sheet, they print that money. And so now, if they start expanding that balance sheet up 8, 9, 10 trillion, 11, 12, a lot of people think it's going to 20. That's going to create inflation. And so that's kind of your doom loop. So as they create inflation, they put even more pressure on that budget. And so how do you get out of the doom loop? Right? So the only way you get out of the doom loop is to pay off your debt, which isn't going to happen.
Right.
So in my opinion, the doom loop has already started, and the Fed is going to have trouble printing what they want to print, and expanding their balance sheet as big as they want to expand it. Like they have to bail out banks, for instance. Last time in 2008, they were bailing out insurance companies. And then the U.S. Treasury is going to have a problem because how much bigger can they create their budget deficit? And because I think it's going to go next year to 2.2, 2.4 trillion when we enter a recession. That's huge. And you're talking about borrowing $200 billion every single month. When does the bond market start to crack? I think we've already entered into this problem and Wall Street's ignoring it. And the irony of all that is that the stock market right now is overvalued. I heard one number of 8%. So right now we have a PE of about 21. And the only way historically that's overvalued. Somebody said 8%, 8, 10%, but the stock market is basically overvalued significantly right now. And the economy is definitely not strong. They keep saying it's strong. It's total baloney. It's weak. And I mean, Jeff Snyder last night, he had a really good video on the bank earnings and the comments from the banks, basically talking about their customers. Their customers are having problems here. And so under the covers, I think the economy is weak, and it's not going to take much, I don't think, for this thing to flip into a recession, and that doom loop gets worse and worse and worse. And that's the reason why gold is high right now. Gold is at an all-time high right now. What in the heck is gold doing? Today it's at an all-time high. What in the heck is gold doing at an all-time high if the economy is strong and they're cutting interest rates and we're going into resurgence of economic growth? It makes no sense. And gold is not going higher because we have inflation right now. Inflation's down. That's not the reason it's an all-time high. It's an all-time high because of what I just explained about this doom loop that is becoming very obvious to the markets, if you will. And the US economy is 25% of global GDP. And the rest of the world is basically saying, we don't trust the US bond market. Now, the thing about US bonds is US bonds are literally the foundation of not just the US economic system, but the entire globe economic system, because people rely on the short-term treasury bonds, treasury bills to be risk-free. So we use those as collateral, and we also use them as global reserves. So if those are no longer risk-free, that blows up the whole shebang, if you will. And so that's the reason why gold is at an all-time high.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
Yeah, fantastic breakdown there. And just for context for the viewers, we're recording this on Wednesday, October the 16th. Gold currently at all-time highs. John, your thoughts on anything that Don went over there, and also on how you see the rate cutting cycle advancing. Obviously, the Fed cutting by 50 basis points previously, joining Canada, of several other countries, the EU, in cutting rates. How do you expect them to deal with rates moving forward, and how could that impact the gold price?
Sure. Let me answer that first, and then I'll talk about some of Don's comments. The Fed Watch Tool, which is a free website your listeners can check out, CME Fed Watch Tool, is showing a 94.2% probability of a 25 basis point cut 2 days after the US election on November 7th, right? So that's the next meeting. The one after that, mid-December, it's also probable that we'll see another cut. The real question is then what does 2025 look like? And I think the US election, the Middle East, a lot of this is going to determine the path of the Fed for next year. So, Jesse, as you know, I really don't go out on a limb like more than 6 months because this world is too crazy. You can't really look out and say, oh, gold's going to be at 5,000 in 5 years. I always laugh when I hear banks or analysts talk about this stuff because based on what? Like, what are you looking at to justify a double in the gold price, right? Like, I mean, we've already had a wonderful run in gold this year. Hopefully, it's sustainable. Don and I are both positioned for that. But the Fed is going to have its back against the wall, like Don had said. You know, they only have limited bullets, and so they can only look in the mirror and blame themselves for the mess that we have right now. Going to Don's comments, I do want to touch on the S&P because he mentioned that the PE right now is around 21. I follow this very closely. Back in 0809, we had a similar situation with top heavy holdings in the S&P. We all know how that ended. It was terrible for investors. Right now, you've got 7 stocks generating most of the upside, the alpha in the S&P 500, which we've talked about on your show as well. When you pair out those 7 holdings, I guarantee that PE is much lower than 21, right? Because the top 7 holdings, which represent a good portion of the S&P in general, I would argue 25 to 30% if I were to look, their PE is much higher. So when you're a retiree, I think an important point to mention to your audience is to call your financial advisor when you watch this and say, we've had a 15 and a half year run, Mr. Advisor, in our broad market. Like, what are you doing in my portfolio to protect against the downturn? The answer usually is nothing. I mean, most advisors will buy model portfolios that are heavy in S&P, NASDAQ type, US indices, and they'll buy the EFA overseas, they'll buy emerging markets overseas. They're not buying gold, they're not buying silver, they're not buying, interesting stuff, alternative investments most times, maybe up to 5%, 7% of someone's portfolio, but 5 or 7%, as I've said, as long back when I was in the field for Sprott, that's not going to protect you in a downturn. You need to have a significant portion of your assets at this point in the cycle in something that's going to be defensive. And I see gold, I see 2 buckets. Don has pointed out some great points about the reason for gold's ascent. I see 2 buckets right now. I see people like us that understand why gold and silver are relevant in portfolios. And I also see another side that we've talked about in your show too, Jesse, about people chasing Bitcoin, chasing AI, chasing tech. Don and I don't chase anything. We're value investors, right? We're sitting back and saying, this little junior 1911 gold was worth 1.3 billion Canadian in the last upturn 2012. It's trading at a $20 million market cap now. Why is that? It's completely mispriced, and we look at that and say this thing could be in production in December of 2026. That's 26 months from now. So when you look at an opportunity like that trading at 10 cents US, why would I want to go buy, tech? I mean, that thing could double by accident over the next year. Show me that Apple will double in next year. It's not going to happen.
Well, I want to touch on silver here because it's currently holding strong above $30. That run began in May. Aside from a couple dips into the $26 to $27 range, it has been holding above 30. What are both of your thoughts on silver? Obviously very far off from all-time highs. And Don, I know that you've been predicting we could see $50 silver this year. Do you still think that's a possibility?
Yeah, my target is 40, but I think 50 is possible. There's several different scenarios, but for me, I've actually been bearish heading into this election. Like right now, today, I did a poll and only 14% of that poll was bearish for going forward here for the price of gold and silver. So I'm kind of in the contrarian camp right here for the near term. I think that the election is actually going to be very negative for the stock market. I think so. They're going to cut, like the election's on the 5th, they're going to cut on the 7th. I think what's going to happen is I think the stock market's going to go down on the 6th. I think they might cut 50 basis points based on based on the results of the election. And if they only cut 25, I think the market's not going to react well. But I think this is going to be an historic election. It's going to be very volatile, and I think it's going to push everything down. And so I don't know how far. November is going to be very interesting, very dicey. I actually think that the markets are going to start heading lower before the election out of concern, um, and we'll see if I'm right about that. But the markets have been on fire. Um, S&P's at all time. It keeps getting all time highs, just like gold. 58.36. Last I looked. It just got above 5,800. It's holding. So we're having this unbelievable run, and I don't think the markets can support these levels. I think that this is a blow off top. I think we're heading into a recession. I think the Q4 after this election, I just think it's going to be very wild Q4 with a lot of downward action. Now the question is, like right now, I think 33 is the breakout level for silver, but I don't think we're going to get there before the election. And then I think we correct. And so the question is, what's the cycle low going to be? The next cycle low going to be? I don't think we go all the way to 25, probably not 26, but I think 27 is definitely in play. That's kind of the area I'm looking right around 27, 27.50. So that's what I'm expecting. And then for gold, I think we're going to go down to 23.50. That's kind of my area. But I don't expect to go to 2200. 23 to 24 is where it kind of, so is it going to be a little bit, I'm seeing a mild correction in gold and silver. And then we get through November, and I think December is going to be, everything's going to turn positive for gold and silver in December is my expectation. Now, if we don't correct down to this 27 level, 27 or 23.50, we don't correct in gold and silver, then we could, 50 doesn't seem possible to me in this half. It's going to take some time to run from 35 to 50. I don't think it can do it in 2 months. But we could, my target's 40. I think we'll definitely get to 40. Maybe it'll get a little above that. But I don't think we'll get to 50 this year. But I am very bullish for December. Not for stocks, but for gold and silver. I think we get a decoupling. The gold and the S&P have been running 1-to-1 since March. I think we're going to get a decoupling here in December, where gold and silver go up and the markets go down. So I'm very bullish for December for precious metals, but I'm very bearish heading into this election. I just think we're going to get a cycle, the final cycle low here for both of those metals. And but either way, I see the metals ending the year on a very bullish note. And next year, I'm very, very bullish. The metals, very bearish the economy. And I think we get to $50 silver by March, and we get to $3,000 gold by March. So first quarter next year, I'm very bullish.
And John, your thoughts on where you see silver headed, and maybe if you could add anything to the election conversation, how you could potentially see that affecting the precious metals and just financial markets in general.
Sure. I'll start with the silver piece. Silver is our largest holding. Jesse, I've been on your show all last year saying it wouldn't break above 26 an ounce, even though it was my largest holding, because I always try to tell it straight, and we were correct. This year we said something different, which was that $30 target would be taken out to the upside, which has held, by the way, as resistance for 11 years. That did get taken out twice like butter this year, which is really bullish price action because we expected, following silver for 24 years, that we would see some more resistance at 30, but we didn't. It went to about 32.50 and pulled back. As you know, it tested around 27-ish. And then now we're right back to 31.60 as we record this, or so 31.70. So bottom line is silver is going to test that 32.50 again. And if it breaks to the upside, it'll take out that kind of 32.50 to 33 range here. and then test 35. So I'm a little less um, bullish than Don in terms of 40. I mean, if you get above 35 on a few closes, then yes, but you need to see a clear 35 on a few closes for us to get more excited. But the point of all this is, why are investors being so cute with purchasing silver stocks? Like, just go buy something. Like, you need to go buy something now because silver is going to take a run, and silver doesn't care about your timeline. Silver is like the most aggressive commodity that I follow. It has a mind of its own. It always has. And so it's one of those things that bucks people off many, many times. And then you just see an explosive day followed by another explosive day. I'm talking about like 2011, 12, right? Or back in the 80s. And you just are chasing it then. So you want some silver equity exposure right now. To answer your question about the election, I mean, look, it's close. Some polls have Trump ahead, some polls have Harris ahead. I think, per Don's point, if Harris wins on the 5th, the 6th is going to be very interesting, and the 7th, all eyes will be on Powell, and he better say the right things because that will be a big moment for him in his career. Um, let's just say that Harris has put forward a lot of things that would hurt Wall Street in terms of capital gains. And I could see a lot of tax loss selling happen in November and December if she gets elected.
Very interesting thoughts. I want to quickly touch on Russia announcing that they will be focusing on adding liquid hard assets to their reserves, including silver, platinum, palladium. They mentioned gemstones. This is very interesting because, of course, we hear about central banks accumulating gold. I have not heard of any governments outside of Russia, at least publicly announce that they're putting money into physical silver, platinum, and palladium. Very interesting move, Don. I wonder what your thoughts are on this, and do you think this could be a driver for the price of those metals?
I don't. I think it's a bit of a nothing burger. I don't see Russia, they don't have a large economy. I don't see them basically swallowing up silver, if you will, swallowing up plat. Now, if they start collecting platinum, there's not a lot of platinum out there. But they could push the price of platinum up a lot if they did that. But silver, I don't see that as being really a significant issue. But the thing about silver, for me, there's just not enough silver. So it's not Russia that's going to drive the price up, in my opinion. It's going to be the retail investor. So silver is basically a gift and good. People want it as it goes up in price. So I see gold as a hedge against uncertainty, as a hedge against systemic risk. And we haven't had systemic risk since 2008, but I believe that systemic risk is a lot higher than people really realize. And the reason why people aren't concerned with systemic risk is because the Fed has been successful in managing this economy for 10 plus years. So they're like, I mean, look at the last banking crisis we had where they had to close down Silicon Valley Bank. I mean, it lasted like a week, and the Fed basically fixed that problem. So people aren't really worried about systemic risk, but I firmly believe that once systemic risk comes back around, you're going to have a big move into gold by retail. And they're going to be protecting against that systemic risk because a lot of people, I mean, they have their money in banks, and physical gold is one way to hedge against that. You have you have too much money in stocks and bonds, so I want to have some gold as well. Well, if that happens, I think that silver is going to be a proxy for gold. And so people that can't afford, it's $2,500 for one coin plus premium. It's almost $3,000 for a coin. People don't have that much money to buy any gold, a full coin. And the premiums are too high if you're going to try to do, half a coin. And so people are going to buy silver instead. And so there's only really two. You have your 5 ounce and you have your 10 ounce bars. That's really those are the go-to metals for silver, because coins, you have a huge premium and people don't want to pay that. And then you have rounds. People aren't super excited about rounds. 100-ounce bars are they're too wealthy. They weigh about 8 pounds, and they're could be worth like 10 grand for silver goes to 100. Each bar's worth $10,000, and people don't want, they're not easy to sell. So people want the 5 ounce and 10 ounce bars. Well, guess what? They're going to be unobtainable because there's not a lot of inventory of 5 and 10 ounce bars. People just don't keep pallets and pallets and pallets of these bars. AppMex probably has the biggest inventory. And so once AppMex is out, you're not going to be able to find it except for on eBay where you pay 100% premium, 50% premium. And so it's going to be unobtainium, and that'll just going to drive the prices higher and higher. And then finish my thought on retail. Once you're out of 5 and 10 ounce bars, what happens is these refineries go out and order 1,000 ounce bars, because 1,000 ounce bars is that's the industry standard. And that's what people buy to create the 5 ounce and 10 ounce bars. So the refiners are going to start ordering these 1,000 ounce bars. Well, that's going to compete against the fabricators. And that's when you're going to have a shortage. We're going to run out of 1,000 ounce bars. It's not so much Russia soaking these things up. I think retail is going to soak it up. And I'm expecting a shortage in 1,000 ounce bars somewhere before $50 silver, depending on how fast we get to 50. Like I said, I don't think we're going to get to 50 this year. Maybe it's going to take till 60, 65 before we run out of 1,000 ounce bars. But I don't think it's going to take long, because you're going to get hoarding. So if you're a fabricator and if you don't have silver, you have to shut down your plant. You're going to start ordering a pallet of 1,000 ounce bars so you don't run out. And there's not a lot of inventory. So it won't take much. Take a few companies hoarding silver and you're toast. This happened to palladium. Palladium went from around $100 to $1,000 because of hoarding, because there wasn't enough palladium, and these companies, they didn't want to run out, so they started hoarding palladium. I think the same thing's going to happen with silver.
Very interesting. John, do you have any thoughts on that? Are you watching the retail participation when it comes to the physical metals?
I'll keep it short because I'm sure you have some other questions, Jesse. But in the silver space, yes, I totally agree with Don. You need to align yourself with an honest, reliable coin dealer that can get inventory. Those are very difficult things to do in a hot market, because I remember trying to buy silver in 2010, 11, coming out of the crisis, and coins where I lived were impossible to get or trading at very high premiums. Secondly, my answer on the Russia piece: Russia is a huge producer of nickel, platinum, and palladium, which a lot of people don't know. I personally feel those three metals are in the tank because they are in a war, right? They are funding their war effort by selling these metals probably to China. And that's one of the reasons you've seen nickel down 43% last year. This is not a stock, this is a commodity. And I would argue a top five industrial commodity, right? So things I think are going to bounce in nickel, platinum, palladium, not like the next day, but very soon after Russia resolves things, whenever that's going to be, if it's next year or 2026. But that's why we're buying some of these stocks now that play in those three commodities, because those stocks are also depressed artificially.
Well, let's discuss some of those stocks. I was going to talk specifically about gold and silver miners, but definitely feel free to discuss anything you're seeing in palladium, platinum, nickel as well. Where are you currently looking for value in the markets? And also, I wonder if you have, maybe we'll start by your thoughts on, why the gold miners in particular have not outperformed the price of the metal. Being at all-time highs, a lot of people expected a mania in the gold stocks, particularly developers and explorers. We have seen the bigger producers, some of them perform very well, your Agnico Eagles. However, developers, explorers seems to still be crickets for the most part. What are your thoughts on that gap in valuation, and do you think that's going to close? John, I'll start with you.
Well, let me start by saying I'm an advocate for the sector, so I don't want people to think that I'm going after any particular company by saying this, but there have been a lot of missteps in our sector. Let's just look at the last 2 years. Alexco is selling for pennies on the dollar to Hecla, another newsletter favorite, going nowhere. Marathon sold to Caliber in November of last year for pennies on the dollar. Terrible timing. Caliber's the winner in that transaction, right? Now you're seeing, things like Victoria up in Yukon this year have problems as well. And those Yukon stocks, I think, and I'm sure Don agrees, are artificially down because of the region that they're in, right? I know Don likes Banyan and some of the players up there, and that's, as a value manager, what you look for. Again, like, going down through association. We see this in Mexico. We see this in Peru. It's like, it's just unbelievable the value you can find if you understand how to talk to a CEO. And that's what Don and I do very well. Don and I spend a lot of time every week talking to CEOs via email or on the phone. I spoke to 7 this week. I met with 28 CEOs at Beaver Creek. I think Don met with more than that. It's like we're really working hard for our clients. And I don't see a lot of competition doing that. They're just some of these newsletter writers are clueless. They're just following the herd. We had a zero position on Alexco, a zero position on Marathon, and a zero position on Victoria when those things went down. So I would say, again, Jesse, it's not just what you buy, it's what you avoid, and try to think independently. I think that's really good advice.
Yeah, absolutely. And Don, your thoughts on the valuation gap at the moment, or the seeming one that exists between the metal and the miners when it comes to gold?
Yeah, in my opinion, there's a combination of two factors. So the first factor is that we've been in basically a bear market of miners for over 10 years. It started around 2013. And so sentiment kind of went in the toilet, and there hasn't been a reason, if you will, for it to reignite. There hasn't been a fear trade. My feeling is that the reason why the miners did so well from 2001, which we had 9/11, until 2011, was basically a fear trade where we came out. I feel that our economy peaked in 1998. And then when we had the dot-com bubble in 99, followed by the beginning of a recession in 2000, which kicked in gear in 2001. So basically going into the century, people were like, what's next kind of thing. We had this unbelievable run from 1990 to, well, actually 1982 to 1999. It was like a 17-year run, which is kind of what we're having now. We have a 15-year run. And so that run, it kind of ignited uncertainty. And so we had this, a fear trade doesn't mean it's 100% fear. It means there's pockets of fear. There are some investors that are concerned, if you will. You don't have to have, it's not, when I say a fear trade, I'm not talking about everybody being afraid. I'm talking about a segment of the investors are afraid. And the segment of investors are looking for alternative investment. So gold went from $250 in 2000 to 1935. So gold was ripping because of this uncertainty, and the miners did really well. And that all kind of died in 2013. And the one thing that hasn't come back is this uncertainty. Even 2020 couldn't really bring it back, but we had it for a few months from May to August of 2020. We had the 3 solid months of uncertainty, and then it kind of went away. And so investors right now are like, they're waiting for that. I believe they're waiting for that fear trade to come back. Simultaneous to that, is that they don't want to catch a falling knife. They're like, they can see that this stock market's overvalued. And like, I don't want to go into these miners knowing that this stock market is getting ready to fall and we're getting ready to go into recession. I'd rather wait and get in when the fear trade finally gets here. So I think it's a waiting game. And I think that gold is way out in the front here, because gold is basically anticipating this. But silver and the miners are basically both holding back. And I think they're holding back, and they're a signal. And I've seen this before. It's like they're a signal, and they're like a flashing red light saying, caution, caution, caution. We're getting a rug pull. And I've been talking about this in my newsletter and my weekly, post. It's like, get ready. We're going to get a final rug pull here and the big rug pull is the stock market. That's the one I think is going to go down over 20% here from now till the end of the year, and then keep going down first half of next year. I don't think we're going to get a bottom until like late spring in the markets. I think it's going to be like a 6 month, 8 month downward tug, if you will. And that's the big rug. The big rug pull is that's the big rug pull is the stock market. But gold and silver will get pulled down with them. Some people think that that initial pull down, and this is the reason why these miners are really holding back here. Some of them are super cheap. The ones I'm going to mention are all 10 baggers. They're super cheap. And the reason why is because, like, in 2011, we had the HUI at 635. Today we're at 320. I mean, it's not even close. It was at 365 in 2020. So we're not even at a cycle high level. These miners are just holding back, waiting for that rug pull, in my opinion. And so once it happens, I think we rip. And when this thing finally does go, so once we get above over $35 silver, I think the HUI will rip above 400 lickety split and won't look back. So if you're not in these miners, now if you're going to wait till this ripping action, yeah, you're going to do well, but you're not going to get in early. You're not going to get in, these really good returns.
Well, let's talk about some names that you're both watching, whether that's updating on previous companies that you've discussed on the show, whether it's anything new that currently has your attention. John, I'll start with you. As I mentioned, we're focusing on gold and silver stocks, but feel free to move into other metals as well.
Okay. So let's see. On the silver side, we've mentioned Aftermath Silver on your show numerous times, all below 17 cents US. It's trading at 35 cents US now. So that's just a great example, Jesse, of a stock that has tremendous torque to silver. It didn't hurt that Eric Sprott last month put another $5 million into the stock, raising his stake to 19.2% now. I would argue that Eric puts a lot of 5 and 10 percenters on there, but he doesn't put a lot of 20 percenters on there. And so when you see that, you have to understand, why would someone who's a billionaire who really knows our sector quite well do that? And just call Michael or Ralph at Aftermath and ask them. I mean, that's really how you get those answers, because it's not going to be in the press release. The press release is just going to say, hey, Eric Sprott put another 5 million in, right? But it really cashes them up, which is, I think, why the stock is now trading better. It's like that avoids dilution. Another one in silver that we like, and I know Don likes, is Silver X, AGXPF. Jose lives in Peru. It's been a stock that's been a turnaround story, no question. He had to lay off a lot of people last September, but guess what? His costs did that. The cost of the company, meaning cost out of the ground per ounce, made him do that. He survived. When you're at $20 to $22 silver and your costs are 25, you've got to make decisions that are not the easiest decisions sometimes. And to his credit, he did that, but it's reflected in the share price, right? I mean, the stock is not trading so well. It's at 17 and a half cents as we record this, but there's major support at 14 to 15. So we were encouraging our subscribers, hey, at 14 to 15, we're just going to be putting buy orders out there because we don't think this is going to break. And now you're starting to see it move up again, which is good. On the gold side, let's see, on gold, I'll give you two polymetallic names that I think gives your listeners an opportunity to do well in different types of environments. Meaning, if someone's trying to find gold, silver, copper, some other types of metals, your risk is lower, right? Because if they're a good operator, they're going to find all of those metals eventually. One that I like is Denarius Metals. I met with last month at Beaver Creek. The ticker is DNRSF. I met with Serafino, who is the CEO. Serafino was a director at Aris, which is ARMN. Aris has a huge project in Colombia, and this project is not far from that at all. So when you see these kind of things, like someone who was very successful in Colombia for 2 decades, starting their own thing, bringing the CFO over, they've worked together for 17 years. And they're going into production between May and August of next year in not one, but two projects. Like, how is this thing trading at 45 to 50 cents? You know, it's like this thing is going to move much higher. The market is now holding back, saying, well, we want to see them raise that money. That makes sense. But like I would argue, there's so many companies out there, as Don and I track, that have 2 to 300 million capexes. I think investors need to ask how the heck are they going to raise that money as opposed to raising 30 to 40 million. Like I think that's going to be a pretty easy feat for them to do. So that's again what Don was saying earlier. You need to take risks sometimes, but it's calculated risk. You know, go into something a little earlier than the market because you're talking to the company on a regular basis and you've seen, you know, what their path is going to be to get back into production. So I really like that story. And the last one, the other polymetallic would be something that Don doesn't follow in nickel and in copper, which is power metal. Excuse me. Power nickel, but they're going to be changing their name sometime next year to reflect their copper hits, and that one is PNPNF. Terry's a really good leader. The stock has exploded on high volume this year. Rob McEwen put a second tranche on. Robert Friedland from Ivanhoe put his first tranche on. These are huge investors in our sector. When you see the likes of McEwen, Sprott, Ivanhoe's Friedland coming on board, as an investor, you have to say, why is this? I mean, if you can't read the press release, I get it because not everyone's a geologist, but understand that when you see these guys putting positions on, it's sometimes a good sign, gives you an idea to say, hey, maybe I should call this company, get a better idea of what their plan is going forward.
Great. That's some great insight there. I've interviewed Terry before from Power Nickel. Um, Very straightforward guy, knows what his plan is, and seems to be executing. So completely agree there. Don, what are some names that you're currently watching that you think present potential?
Um, I'll start with silver. So I'm going to name 4 development plays. So my favorite is probably Discovery Silver. They have 1 billion ounces of silver. I'm only valuing them at 500 million ounces. I mean, it's the largest silver development play out there. They've submitted their permits. I think they're going to get their permits sometime next year. Um, so I'm really excited about it. Considering how much silver they're actually gonna mine, the capex is actually is low. Some of these projects are kind of the other side. They're like small production, huge capex. I really like these ones that are huge production and the capex isn't super high. But I'm really excited about Discovery. I like the management team a lot, and I like the insiders a lot. So I don't think this company's for sale. I think they're going to build it. Um, it's super cheap because people don't think they're going to get their permits. But this is a $10 billion company and it's valued, I think, around 250 million, I think. So that's my favorite one. Then the next two are very similar stories. And I like them almost as much as Discovery, and that's Vizsla and Go Gold. And now the difference between the two is Vizsla is a, their capex is for one. It's basically, the first stage. They're going to be mining 15, 20 million ounces silver equivalent. They only have silver and gold. But their PEA was fantastic. 225 million capex to mine 20 million ounces. And Go Gold, they're Los Ricos. It's two, Los Ricos South, Los Ricos North. So they have to build 2 mines, so it takes longer. But their first mine will get into production before Vizsla's. But those three, I like all three of those because they're really large projects. And I just, if silver prices go up, their free cash flow is just going to be monstrous. Um, and all three of them that have fast paybacks. It's not like they're loading themselves down and it's going to take them forever to pay it back. I think that all of them have paybacks of less than 3 years. I think Vizsla's is less than one. It's ridiculous. It's like a 1 year payback to mine 20 million ounces of gold. It's Vizsla's PEA is crazy good. But those three development stories I really, really like them. Um, and they all have strong insiders, so it's going to be tough for somebody to try to steal them. The fourth silver development story I like a lot is Silver Tiger. And it has a little bit more risk, but Glenn Jessam, I've had a few meetings with him, and been following them for 3 years, and he's done everything he said he's going to do. That's another one in Mexico, or all four of these are in Mexico, where the people are a little concerned about permitting. But I don't think it's going to be an issue. He's trying to get his permits early next year, as soon as he can. But yeah, I like Silver Tiger a lot. All four of those I think are all possible 10 baggers. Then I have two gold development stories that also I think are 10 baggers. The first one's Heliostar Metals. Heliostar, they just got such a fantastic, they got all of Argonaut's gold projects in Mexico for a steal, basically. So the first one they got was Ana Paula, which they're working on right now. And it's basically they want it to be 100-ounce producer. And then they just picked up three more projects from Argonaut. So now they have all of Argonaut's projects down there. Oh, and plus when they got down to Paula, they got San Antonio. So they have 5 projects. And they didn't have to pay very much for them. And they haven't gotten revalued. It's like investors are like, okay, well, they have went up about 50%, but considering I think they're going to be at least a 200,000 ounce producer, and they're not getting that value because people are like, wait a minute, these projects, they can't be any good because Argonaut is giving them to you. Well, how can they be any good? But what investors are missing is the price of gold. Gold's at $2,600. These projects, they work they work at $2,600 gold, and then they have projects that you're. One of the things I like as an investor is if you can get a pipeline. A lot of times these pipelines, a pipeline is another project they can build in the future. You can get a pipeline that they're not getting any value for. For instance, Heliostar started out as an exploration company in Alaska, their Unga project. So that Unga project is still there, and you're basically getting it for free. And so it's 400,000 ounces of like 14 grams, and it's got a lot of exploration potential. So they're going to use that cash flow down in Mexico to drill Unga. And then also the San Antonio projects, I think 1.7 million ounces, that if Mexico allows open pit mining, that San Antonio could easily add another 100,000 ounces, which isn't priced in. So that would take them to 300,000 ounces a year if they could get San Antonio. So there's Heliostar. Then the final one is Next Gold Mining, which used to be Treasury Metals. So I followed Treasury Metals for 10 years. It's been a very slow process, but then they merged with another company and got the Goliath. So now Treasury Metals has these 2 projects, and now they did another one recently with I want to call it Black Copper, but Black Wolf Copper. I can't remember the name, but they just did another one. But it was a really odd merger because it's like, wait a minute, Treasury, you're merging with a company, but you're probably not going to even build their project. But what they got out of it was Frank Guster. Frank Guster is the largest shareholder. And so I think it was Black Wolf. And now Frank Guster is 10% shareholder of Next Gold. And so Next Gold, they have he's not on the board, but he's a strategic advisor for them. But I just think that project now is far enough advanced. Like I said, I've been following for 10 years that I think it's going to get built. And so I like those 2 development stories. I also say that I own the projects John mentioned, and I like all those, Denarius, Aftermath, and Silver X. They're all very exciting projects for me. A little bit of risk on each one, but for me, as a speculative investor, I like them all. Denarius, I really like the CEO there. Like he came from Eris, knows what he's doing. Polymetallic, it's super super cheap. The one thing about Denarius, it's only trading OTC right now, and it has low volume. They need to get that thing listed somewhere else, and then it'll take off. Aftermath is crazy cheap. Aftermath, when you bring in the manganese, It's a zero cash cost or negative cash
Zero.
cost for mine, which is crazy. That thing's worth $1 billion all day long. I don't know why investors are ignoring it. I guess they think manganese is worthless. And then Silver X has got a ton of silver equivalent. The thing, all Silver X and Guanajuato to me are like pairs. Those two companies have tons of upside, but they actually have risk because they're both high cost. But as silver prices get to 33 and stay there, get to 35 and stay there, companies like Silver X and Guanajuato look really juicy. But silver goes back down to 27, and which I don't think is going to happen, 28, then they struggle. But I think those two companies I think are fine at $30 plus. I'll leave it. I'll
Well,
leave it there.
yeah, fantastic conversation, gentlemen. Thank you so much. Before I do let you go, John, tell us about Feneck Consulting. I know you've got a conference coming up, which is going to be fantastic. Unfortunately, this episode's coming out shortly after the conference. You've got your next one planned, so if you want to speak to that a little bit, feel free as well.
Sure. So fennecconsulting.com is our website. We just posted our September 30th numbers. I've been running my own, family money for almost 9 years now, and we're almost 9% ahead of GDX and GDXJ year to date. So we're closing in on about 37% up. We're really proud of that. We grind every single day. It is not an easy sector to make money in because of all the things I talked about earlier with Alexco Marathon and Victoria most recently, where you just have a lot of landmines you got to avoid out there that can really destroy your performance. So I would ask people to take a look at our website. We have a number of different services. We really try to work with investors right now to give them a good deal based on their personal situation. So if you say, "Hey, I just lost my house in Hurricane Milton," I'm not going to charge you the website price. I've got a heart. So, come to me and just say, "Hey, I don't know what I'm doing. I've got this much money, and tell me about your process," and I'm happy to help. Don's like that too. He's way underpriced on his website. Secondly, the conference is October 20 through 22. It's going to be in Four Seasons, Fort Lauderdale. We're going to do that with speakers like myself and Don and a bunch of other great speakers. But we're really focusing on networking, Jesse, which we think is a real important component of conferences that isn't, missing, but it really isn't really the focus. And so all of our events are focused on getting to know, clients getting to know CEOs, right? That's really important. That way you build a relationship, and when you have a question, you can actually get your question answered by one of the people we're talking about today. Our next one, because I realize this is going to be probably a moot point, is going to be May 11th through the 13th next year, same place, Four Seasons, Fort Lauderdale, and we hope people will check it out.
Awesome. And Don, tell us about goldstockdata.com and anywhere else you want to direct people online, feel free.
All right. Yeah. So my website, it's not a stock picking service, newsletter service. It's more about data, gold stock data. So it's for people that have a portfolio of gold and silver miners, and they want, to find additional stocks. So my database has 850. So I cover all gold and silver mining stocks. And so it's a great resource for gold and silver mining investors. And the price is, it's definitely worth the cost. And we don't charge a lot, if you will, for what we give back. But there's that. And then you can follow me on Twitter at Don Durrett if you want, more news or macro kind of data, if you're a data junkie.
Great. Well, I'll put links to all of that in the description below so people can check it out. Thank you once again, gentlemen, for coming on. It's been a blast, and looking forward to part 5 of our conversation in the future.
Thanks, Jesse.
Thanks for the opportunity, Jesse.